Okay, today is Sunday, April 27, 2014. Let's take a look at some of the stock before the market open and resume trading tomorrow. First of all, let's take a look at Apple. Apple really had a good week, and after the earning announcement and the buyback, dividend increase, and the stock split, it really changes the sentiment on Apple. And all of a sudden, right now, there's a lot of buzz around it again. But of course, we still have those doubters that has been, looking forward to come back down and retest this 495, and even some of them, basically looking at to come back down to this 390 area. But once again, technical is technical. If you look at the price action, you can see just by here, when it came down and it came down and filled this gap here, we're looking at coming down and possibly fill this gap, which it did. But the thing is, you have to notice that it actually closed above this gap and came back up on this price gap here in 2 consecutive days with a little bit of a doji, type of a candle, and then it just kind of pushes itself up, and then you see that. And I was also been saying that we've been sort of like confined in this particular trading band, and I was basically just waiting for the earning announcement and saying that most likely the catalyst is going to be the earning announcement to break out of this trading band, either going to go up on the the upside or on the downside, one way or the other, and get it resolved. Okay, but if you're looking at this thing, right now, even though prior to earning, you see this is us already making a little bit of a higher high here, and then try to pull back on the right before the the day of the earning, which come on the after the close. Okay, so it's kind of pulled back. I think a lot of people were sort of anticipating another bad report from Apple, lack of new product, and also all these so forth and so forth. Then who would have known that Apple came out and played this financial engineering game, which completely changes and caught a lot of people off guard. And also the other thing is when I was talking about the option market pricing in that earning move, it's essentially pricing in the upper range of this trading band, and also pricing in somewhere down here on the downside. I believe it's somewhere around 507 or 503, that area here. Okay, so you can see that it really blew through that particular range and caught a lot of people off guard. And the most astonishing thing is on OpEx. Usually Apple get pinned, right near these, max pain level. And one of the level that I was looking at was 565, and depending how they unwind those options, and even at 570, that would be the level that would be, probably hold it right near that 570 instead of letting it go. And you can see, they actually let it and releases it and let it go, shortly. Let me get this in a 30-minute time frame, then we could probably see a little bit more resolution here. Here's this 570, okay, and then right near the last hour or so, it just let it go, and the stock just went too. So if people were trying to scalp that 570 put, that they probably would have also got surprised a little bit. But again, right now with the releasing and breaking to this 570 for Apple, that certainly, have changed the sentiment quite a bit. And if we look at where the possible next level might be on the upside, and if you look at the weekly chart here, we see a little bit pivot high somewhere around here, which is near the, I believe it's not, 593, 595. Okay, this 593 level here. Let me put a data box up here so we get a little bit more accurate reading here. Okay, so it's basically the high is 594.59 on that day, on that week, and here's the 594. So essentially, it's going to be that 594, 595 level here, somewhere up here. And also the other thing that I put up is the, if you notice on the weekly chart here, we're seeing this little bit of a cup and handle pattern. Right? And if we do a major move based on this particular, this price distance here, and it's put up, I think, somewhere around projected 769. Of course, it's not going to go straight up. It just has something, when you look at these patterns, especially on a longer term basis. It's just that you just bear in mind that there's that possibility of getting up there, and this could be trading up like that to get up there, and you never know. It's just that to give you some sort of a price projection of where it might be able to tag. Okay, but accordingly, you still want to trade at a little bit of a closer time frame, because unless you're an investor, then you probably look at it on a weekly basis. But again, on the daily, we're essentially looking at something uh, 693 area there. But let's get a little bit of a closer look here. Essentially, I'm talking about a 593, not 693. This area here, this level, probably in the near term, we could see maybe get up here to tag some of the resistance, anywhere between this 593, 590 area. Okay. Then once again, if we also take a look at the if one of these Fibonacci retracement, and we want to see where that might lead us, and if we take it down here again, if we get to this 693, I mean the 593, then the next level will be somewhere around the 618 at that 127, and if we get that 127, that will be somewhere around this particular pivot, okay, this level here. Okay. All right. So those are some of the near-term possible price target for one to kind of look at. And on the downside, I mean, obviously we have to also be conscientious about the potential downside. And I think the first thing is that we want to see it hold this low here on this particular low on that earning day, which is the 560.73. So we want to see it hold above this 560, right? If you try to get in on the long side, essentially, you want to have your stop somewhere below this level. Okay, now that's a heck of a risk factor here, because you're talking about the stop goes at 571, and then if you want to do this 560, that's a $11 or $12 stop level, your resist, your risk tolerance there, Okay, so you basically have to determine, what is comfortable to you, because if you get too close here, because Apple, does have a wide range on a daily move, and if you have your stop too close, then you could be a whipsaw and get stopped out just on a daily basis. So once again, you want to look at it on the first basis is that 560, and at worst, you want to be able to hold this 550, right above this breakout point, because if you don't want to get caught coming down and fill this gap. If you're going to come down and fill this gap, then this move is a false move. Okay? So essentially, if one might want to look at it in terms of if it could hold this level. Let's say, for example, it come down and come down and tag this level here. Right? Okay. Then if it come down and tag this level, you want to look at for some sort of rebound confirmation and try to get in here, and then with a stop beneath that area, because if it come back down, then this gap is most likely going to get filled. Okay. So that's one possibility. Or if it, let's say if it just run up, don't chase it if you're not in. Let it come back down and test this level again, or get close to this level, and then try to get in and then put in the stop near, underneath this 570. Okay, so that way you kind of limit your risk a little bit. But right now, the risk is pretty big if you're trying to get in right here. Okay, so if Apple's going to run from this breakout, you're going to have a lot of opportunity to try to catch these pullback and get a better risk and reward to do the swing trade. Again, we're basically talking about swing trading. If you are going to be doing some intraday trading, then that's a totally different matter. Then there are a lot of different level to look at, which I'm not going to go into on this video, because I don't want to focus people on to day trading. It is really take a little bit more. I would say much more discipline to be successful in day trading. So anyway, let's go and continue to look at the other stock. And the next one we want to look at, let's take a look at Twitter. Twitter is scheduled to report earnings on Tuesday. Okay, and Twitter is really, we're basically, when it came in here, right, when it bounced back up to this 42 level. Okay, so we are thinking that, it finally caught a bit and pushed it back up, and then we essentially are looking for it to see could it get above this 47, and you can see that it kind of fell with a little bit of a shooting star, sort of type of a shooting star doji candle here, and then it just followed through with another indecision, sort of a doji. And then on Thursday we got this outside bar here, outside candle, just basically taking out the previous day, and you can see that it's pretty negative, even though it came down here and bounced back up a little bit. But on Friday, it just come back down and retest this 42, and then it broke through that 42. Now it seems like it's destined to come and test this post-IPO low somewhere down at this 39, and we'll just have to see how the price action going to look like. Are we going to get a little bit of a doji hammer or something like this? Maybe or it's just going to be a big big candle just coming down and a major breakdown. So we basically just keep and watch on that. Right now it's a little bit tricky because also with the earning come out, it's just so unpredictable. And then the other one is Facebook. We're also looking at Facebook, and Facebook was, when it came down and tried to fill this gap, and it did not completely fill this gap here, and it bounces back up, and we're thinking that it might be able to, on this retest, coming back and actually put in a little bit of a higher high here, right? That it might have, maybe it could break out of this consolidation and move back up and possibly get back up above these level here in the 67 or so. But as it turned out, you can see there's two outside bar here. So here's that first one. This is the this is the first outside bar. So when it booked, the following day when it booked below this low, that would give us a clue that it's going to be further weakness. Then on Thursday, another outside bar, and then on Friday, when it booked this low, this sort of confirmed that this downside might not have been finished yet. And I'm still looking for that to come down and fill this gap, and then possibly come back and maybe tag this level here. Okay. Because also the other thing, we got this 200-day moving average down here as well, and a lot of people might be looking at that for potential support. So we might get a bounce when it get down to this level here, somewhere around this 53 level. Okay. But if that doesn't hold, then there's a good possibility we might be looking at lower prices, and it could be coming down to break that 50 level somewhere around maybe near this area here, this particular pivot. Okay, so that's one possibility. And then the other one we want to look at is Netflix. All right, Netflix got a little earning pop, and actually, we got this little downtrend line, kind of bump up to that resistance, and essentially came down, right? Came back up and tried to tag this, this right here, this pivot low here on the closing basis, on a resistance. Then it just kind of pulled back and filled this gap. And I was saying that it wouldn't be surprised to see this gap fill. Then the following day that it actually got filled. Then it's kind of came back down to this, price gap a level here. Sort of seems to like it was holding support or something, and it bounced. But then on Friday it just broke down. So right now we're essentially looking at, maybe come down and tag, come back down and tag this level and retest it again. And most likely, if it can't hold, then we're looking at to break that 300 and possibly get down to this level here. Okay, so that would be somewhere around the 300. If we break that 300, we'd be looking at this pivot closing low at 387 to 383. So definitely going to be down below the 290 area. Okay. And the other one was Amazon. We also saw Amazon reported their earning, and then it kind of popped a little bit on after hour. But then the following day on Friday, when it opened, it just gapped down and just went right to the option market, pricing it below this 208 area, 309. I mean, 308, 309 area. So essentially, I got this little blue box here. That was the range that the option market was pricing it. On the upside, somewhere around 357. On the downside, was somewhere around 309. So you could see that it actually went right to. And right now, be surprised to see it come down and sort of tag this this pivot low here. And also, I got this Fibonacci retracement here. And if we look at these, sort of a H pattern breakdown, then we'll probably be looking at this, 288 and 278. So you can see that this low here is pretty close in confluence with this 141 extension. Okay, but also, this 288. Could be up at these particular pivot as well. So those are the possible two level, or maybe we see some support if we break this, this pivot, essentially going below 300. Okay, so and again, you can see that this kind of retrace up to this 618. Then just kind of found some resistance and just spoke right to. Essentially, this is the this gap here, or this pivot was the resistance that it encountered on the upside when it tried to bounce. Okay. And the other one is, let's take a look at Tesla. Also want to take a look at Tesla. Tesla, it looked like it's building a little flag here, this little channel, right? And then try to peak above this and try to break through this flag, but it wasn't able to hold. And then we got these, and then follow through with an inside bar. Then actually on Thursday, it's kind of broke below this engulfing candle here. And right now, it seems like it might want to come back down and retest this 186 level. If it's gonna go back up and form this higher high, higher low, right, then you have to get back above this particular pivot. Then that way, then we get a little bit of a confirmation of breaking this particular flag here, or this down channel. These. Okay, this. So we basically have to look at that. There's that 50-day moving average as well. Okay, but right now it seems like looking at this thing, just purely on a technical basis, there seems to be more weakness coming down, and maybe possibly come back and retest this level here. But again, technical analysis, anything is possible. You just have to draw your scenario and kind of be prepared. Okay, nothing is certain, and then you just plan on what are the possibility, and then when the scenario play out, then you will prepare to act accordingly. Okay. And also the other one is Google. And we see Google was, continuously to make this, all these lower high. All right, so you got this, and then you got this here, or essentially this. Right. So it's just, continuing on a downtrend right now, and with the, the test over here, it broke this level. Okay, the support level here. Essentially looking at. So right now it seems like it's working itself down, possibly maybe get a little bounce off of this, this support level here near the 200-day moving average, this little pivot. And if we break that, we'll probably come down and test this level here somewhere around the 489 and see can it stay above this gap here, this price gap. If it's not, then we could see Google heading lower. Okay, so okay, let's take a look at some of the stock that is scheduled for earning next week that might be of interest. And the first one is well, there's a couple of these casino stock. The first one is WYNN Resort. So let's take a look at WYNN and see where it might go. I have not looked at the option pricing on these to see what are the projected price move, but just look at the technical, and we see that it tried to bounce here again. These just like a lot of the other stock, is essentially kind of forming a downtrend here with these lower high, lower low. And as it it seems to be came down here and try to it came down and filled this gap here on this particular day. Now it's coming back down and retest this. So if it's gonna be disappoint, we probably could see it come down and test this particular low here. Then and if it's gonna break this downtrend, they have to move back above this particular pivot somewhere around the 216 level. So on this 201 right now, it's kind of sitting at that 201.49. So might see it come back down and maybe possibly test that 191. Okay, now there might be a bigger move based on the option market, so we never know. But at least just based on the technical on the price action, this seems like the some of the price point or price level to keep an eye on. And on MGM, I think MGM is scheduled to report on Tuesday. WYNN is scheduled to report on Monday, tomorrow. So again, on MGM, you see this, it came down and sort of tested this particular level here and held above it. So it seems like it, trying to come down again. And if you note that that could also sort of forming some sort of like a, head and shoulder pattern here if it break, although this is a little bit of a right shoulder. But the more important thing is it's this downtrend here. So if it break this level, we probably could see it come down, down here to this level, although there is this, 200-day moving average, but I don't think that will be too much of a support there, because it's kind of, there's nothing here to say there's some sort of price support there or price action that signify any kind of support level there. Okay. Then looking at the other, what do we have in addition to that? 3D system. Okay, you can see that 3D, really got clobbered, and from a high of up here somewhere around this 97, and coming back down this is 45. So essentially, it gave back half of its value here, it lost, more than half essentially. And right now it seems like, it's trying to hold this level here at the 45. Okay, but again, this downtrend. If we look at just purely on, looking at this thing using the Fibonacci retracement here, and again we're looking at this H pattern. It certainly kind of signifies that it could come down and retest this low here somewhere around the 43, essentially this level here. Okay. So there's a possibility of coming back down here. And then the other one, eBay is also scheduled, and this is one ugly chart. I mean, why would anybody want to trade a chart like this? There is so choppy. It's just for me, I would rather just look at something a little bit more tradable. This right here is just kind of too choppy, and just for interest sake, we just put up a Fibonacci retracement here, and again we're looking at these H pattern breakdown. Right, see here's that 618. So if it break, basically looking at these level 50, 51 at the 127, and here's the low at the 1618, and that gives us a level somewhere around the 48. So, and on the upside, I have to break above this 55, then maybe it could move itself back up, possibly test this 50-day moving average and that sort of thing. Then the other one, I think, we talk about Twitter, and then we also have Trulia, right, one of the real estate site. So again, this is kind of choppy, and not really much here, other than if it's going to come down, it probably will come back down and retest this low somewhere around the 27 area here. It's just way too choppy. So, and then what else we have? YELP. YELP is scheduled to report on Wednesday, and that too looks like it's going to break down or is in the process of breaking down, seems to be trying to hold this particular support here. Right? Okay, and if we break this, it will probably come down and maybe try to tag and looking to fill this price gap down here at that 42, 43 area. So it'll be interesting to watch to see how it's going to play out on the earning. Again, here's that little pivot high that they have to get above to break this, this downtrend here. Okay. So what else we got here? Okay, we also got Lincoln. Lincoln is also scheduled to report on Thursday. So again, Lincoln is just kind of on a continuous decline here, right? So it's like a low price channel. It's just kind of doing a decline. And if we also just do a little bit of a projection here, maybe using this particular Fibonacci retracement, talking about 145. And if we look at here, there's a price gap here that could be filled somewhere near this 139, which is also in confluence with the 141 extension here. All right, so again, it's all depend earning. If we have to reverse this trend, then probably break this pivot and maybe come up and tag this 187 as a potential resistance. But the downside, it's down here at that 139. So that's why this earning play is very tricky. The best thing is just kind of stand aside instead of risking your capital on a, like a crapshoot. So, but hey, different stroke for different folk, whatever suits you. All right. Here's the MasterCard. Okay, MasterCard is scheduled to release on Thursday as well. Okay, and you can see that it too been on a little bit of a downslope. Right? And again, it failed to hold this particular support here. Right, oops. So, and it's seems to be heading down. Okay. So it might be looking for it to come back and retest this level. Okay. And if we're going to go up, they have to get back up against this pivot and then break this downtrend line. And then maybe it could work itself back up to possibly this level if we break to this particular pivot high resistance. But if it come down, and again, if we just kind of do a little fib just for interest sake, and here are some of these levels here, this 127 extension is essentially is near this 65, so you can see, this level here, and then 161 is probably close to this particular pivot here. Okay, so those are some of the downside target or price level that you need to be aware of. Okay. And I guess that's about it for now. Okay, so certainly, the market is not the easiest place to do any trading right now if you are a swing trader. So again, I think the position still, as a cautious and being in a defensive mode, is best to just stay on the sideline and wait until this thing, the dust is settled to see where it's going to go, because we are seeing some confluence or divergence between the S&P. I mean, the S&P could be easily come down, tag this 1848, 1850, and reverse back up and take out that 1890. I mean, within a week, that could be easily done. But then you look at the Nasdaq, right? And it could come down and then break this 3422, and it could be heading down to this 3250, or at least this 3319, 3320 on this little gap here. And same thing with the Russell, right? It could break this and then this 1092, 1093, okay, and it could be heading down to this 1044, 1045. Right, so there's two different markets when you look at these, the Dow, the S&P, and then you look at the Nasdaq 100 and the Russell. So it's a very tough market to actually take any side of a position. So good luck to you all on next week's trading.